Morning Call. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. It's a Tuesday morning. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel.
Good morning.
Well, things have escalated across, the globe with respect to the geopolitical tensions, right, with Israel and Palestine. But for our own markets, I think global markets and India has shrugged off, at least so far, what's been happening.
Yeah.
So perhaps the markets have moved on, but still there's a lot that's happening across the globe.
There is a lot which is happening, and I think we'll continue to take stock of course, the geopolitics of it. But, let's just quickly start with, the trade setup as always, right? Incrementally, the market did not react. I mean, the reaction was coming through in US futures, etc., but overnight, not very much. I'll get to that. By the way, yesterday, with that sharp fall on the Nifty, and by the way, the Nifty did end pretty much close to the low point of the day, about 20, 30 points off it. The Nifty gave back almost 50% of the rally since Wednesday's low. We were kind of putting that number out that the Nifty's gained 300 points from the Wednesday's low as to Friday's close. Yesterday, in a single session, 50% of those gains were given back. Now, overnight, we had a bit of a decent session. The S&P was up 0.63%. Pretty much all the sectoral constituents of the S&P 500 ended higher. The biggest gainer was the energy part of the complex, which actually ended about 3.5% in the green. It's a large weighted sector, the energy sector, and that has an outsized influence on what the index itself did. And of course, oil's seen that jump. It's trading at about around $88 a barrel at this point in time. Bond markets were shut for the Columbus Day holiday, so we didn't get a reaction in terms of the yields or what happened across the curve. But we had some commentary around bond yields and what that means. Now, when bond yields go higher, it essentially is yields are nothing but market interest rates, which trade, right? And then there is the Fed, which sets interest rates in the system. So when yields go up, it is market financial conditions tightening. And you had, a senior Fed official who came out and said that because yields have risen so much, it basically means financial tightening. I'm paraphrasing here and not exactly going by what he said exactly. He said the implication was that they may not require another rate hike. Markets are doing the job. The dollar rising, yields rising, all of that is financial conditions tightening in the system. And that is essentially what he alluded to. That did give sentiment a bit of a fillip, and that had a bit of an impact on what equities, etc., were doing. By the way, the dollar index was down about 0.25% at about just under 106 odd levels. So that is another plus that we are working with this morning. The near-term trigger for US, right? If you just go by data, the last data was a big blowout number. The jobs data, the headline number was a big blowout. The next one is CPI number 2 days from now. That is on Thursday. We'll get the US CPI, which is, I think, going to be the big trigger very, very near term. Remember, the market in the US did not react negatively because data was very strong. So perhaps the people are waiting for confirmation with the CPI, and that's why this becomes important. Now, tying all of this back to levels here, the Nifty Bank made a new low, but it was not confirmed by the Nifty. The new low for the Nifty Bank was 43,796. But the Nifty did not. And that's the reason why this morning I'm saying that I don't think all is lost in that sense, right? Even in the very near term. Because the market here was looking strong before the events over the weekend. And of course, then what happened over the weekend. Market sold off yesterday. And then we have the dissonance between Nifty and the Bank Nifty. Starting with the Bank Nifty, the big support stands at 43,345, which is the June lows, which is, by the way, not very far away, 1.5% or so on the Nifty Bank. That should not break on any downside which emerges. The Bank Nifty is clearly the weaker of the two indices. The resistance for the Nifty Bank comes in first around 44,400. There are multiple, basically the Nifty Bank has spent lots of time around that level. And then there is a technical level, which is the 40-day exponential moving average, which comes in at 44,677. Pretty close by, both those levels. But that's what the market needs to get past for things to really look up. For the Nifty, the low, which is 19,333, is the sacrosanct level, which should not break. It's about 200 points out from here. The resistance comes in at the 40-day exponential moving average, which is around the 19,605 level. I think with the bump that the GIFT Nifty is implying, we perhaps will open around those levels. So, it'll become a bit of a dilemma in terms of what you want to do. The broader markets, there you go, 70 points up move, and the GIFT Nifty is indicating a start around 19,611, which is where the 40-day exponential moving average is also at. You'd rather had a weaker kind of an opening, which gave you the opportunity, but you'll open right at that resistance line. So I would say, give it at least an hour before you decide to do anything. If momentum really builds up, and that you'll know by looking at the screen, you perhaps participate. Otherwise, give it some more time. Sonia.
Absolutely. I mean, the geopolitical tensions have escalated, right? There's no two ways about that. Of course, the market has chosen to decouple from it. But just to give a sense of what's happening, the battle is really intensified between the Hamas, groups and the Israeli troops at the moment. And it may have some sort of economic implications as well. So the latest we know is that the death toll is now over 1,500. Israel has mobilized over 300,000 of their reservists. Gaza is completely under siege. And what's happening in that part of the economy is also quite troubling. So the central bank in Israel has sold about $30 billion worth of foreign reserves, and the shekel has now hit a 7-year low. So yes, it is for now just restricted to what's happening in that part of the world, but that's something that you need to keep in sight. Having said all of that, as Prashant was mentioning, the market seems to have moved on, at least overnight. The GIFT Nifty is up, about 70-odd points, indicating a big positive start. The US market have shrugged off all the geopolitical concerns for now. But that's also because some positive commentary came in from the US Fed officials. So that resulted in the US markets ending in the green. The Fed vice chairman said that they would remain cognizant of the tightening in financial conditions because of higher bond yields in assessing the future path of policy rates. So there is an expectation that there could be another pause in rates because of the way the yields are moving. And that caused, the US markets to move higher. Even in our own markets, we've pretty much shrugged off what's happened across the globe, which has been the case if you go by history as well. The Nifty is holding on to 19,500. There was large buying by domestic institutions yesterday. DI has bought over 2,600 odd crores, while FI sold less than about 1,000 odd crores or so. Tomorrow onwards, we get thick into the earnings season. So you have TCS's numbers tomorrow, Infosys and HCL Tech day after. Then over the next few days, on the 13th, there's HDFC Life, 14th, there's Avenue Supermarts, and 15th, there's HDFC Bank. And this will be the first, set of numbers post the merger. So we'll keep our eye out on HDFC Bank as well. But having said all of that, it's a dilemma, right, you're dealing with. On one hand, of course, geopolitical tensions and heartbreaking images. But on the other hand, the market, the core market has chosen to move on for now.
Well, Sonia, today, if you get a dip, the odds would be that you would make money if you get into it. And I'll tell you why. Because global reports are suggesting this morning that the Hamas group, they are willing to call a truce with Israel. Just around 2 or 3 hours ago, if you just Google, you'll see that various global reports are indicating that they're willing to come to the table and discuss. So de-escalation is something you're looking forward to. I'll read that as some part of de-escalation. The second point is the Fed officials, they're sounding more dovish than hawkish. And the third factor is the dollar index has cooled off. So this has the makings of a good session if, in fact, you get an intraday dip. The institutional flows yesterday, actually yesterday we got saved from the FII selling. Because you look at the gross flows, the gross FII numbers, well, they were 40% lower than what we have seen in comparison to the average of the last 10 days, which tells you that the FIIs basically yesterday, they weren't really at full go, which is good news because the kind of queues that we had. And in fact, the gross participation was the lowest we saw since Easter Monday. That's since April 10th itself. Short point is, today I'll want to see what the FIIs do. Will they come and sell even more? Or will they continue to hold back as they've been doing in the past week or so? The net institutional flows as well were the best. That's the FI and the DI number put it together. That was the best we saw all the way since 15th of September 2023. What do the FIs do though in the F&O market? Well, yesterday they added some shorts as well. And now the short positioning continues to hover around that 73% odd mark. In terms of the options data, the 19,500 put has the highest open interest on the put side. The premium yesterday went up to around 80 rupees from around the 35 rupees odd. Now, there was some addition out there. There was some sense of writing out there. But it appears, those writers as well were a little bit nervous because you didn't see a big open interest build up. However, the 19,600 call, aggressive writing is what we saw. There more than 30 lakh shares getting added. So what does the data points tell you? 19,500 put did see a fair bit of addition. So 19,450 becomes a crucial support zone. And yesterday's low as well, 19,480. So that's a support zone. On the upside, yesterday's high is around 19,590. That becomes a bit of a resistance zone. And also you have the 50 DMA that comes in at around that 19,600 odd mark. We're going to be starting off closer to that level. So you'll want to build on from there because we're going to be starting pat in that resistance zone. Today, you have the Nifty Financial Services weekly expiry that plays out. And you had a fair bit of writing at around the 19,600 call. The premium came down to around 30 rupees from around 100 rupees odd. So the 19,700 will be a bit of a hurdle, and that index could move in the final hour of trade. Keep in mind, the Nifty Bank has been underperforming, but today we're looking at the Nifty Financial Services Index. So that is the broad range we're looking at. SGX or the GIFT Nifty suggesting that you see a big gap up. I don't think you need to chase that gap up, but if you get an intraday dip, just going by all the cues you have, and hopefully there is de-escalation that we see in Israel, then in fact maybe today is a good day to get in at lower levels.
Okay, well, today could be a good day to get in at lower levels, buy on dips. That's something that, we have been talking about over the last 24 to 48 hours as well. Let's kickstart the show. Let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Cameron Brand of EPFR Global will be joining in to discuss the global trade setup. Later, our research team will bring you CNBC TV 18's list of top 10 stocks for the day. At around 8:30 a.m., we'll do a fundamental stock analysis. We have Hemang Jani joining in. But first up, let's begin the day with some views on the equities front. Lawrence Belanco of CLSA says that following the July to September price momentum divergence, the Nifty has seen the correction break below its 20 and 50 DMA before finding support at the August lows around 19,230. A break below this support zone would open the door for a test of a major support zone at the 18,520 to 19,017 area, including the 200 DMA and the 2021 and 2022 highs. He adds, at this sector level, there is further tactical rotation opportunities out of banks and into the IT sector. This is a year-end portfolio rebalance trade of taking profits in the winners and buying some laggards. TCS and L&T Technology are presented as buy candidates, while IDFC First Bank and M&M Financial Services are presented as take profit candidates.
Okay, let's get you some money market views as well. So we've got some opinion coming in from Abhishek Goenka of IFA Global, who says that war between Israel and Palestine adds a new dimension of uncertainty in terms of crude prices. He says our current account, which is already reeling under slowing exports, could come under pressure even further. He goes on to add, in case that is accompanied by broad risk aversion, we could see outflows on the capital account front as well. In that case, the RBI, which has been intervening around 83.3 levels, so far may have to let the rupee adjust in order to conserve its reserves. However, he says if there is de-escalation, then we could see the rupee continue consolidating in the 82.4 to 83.7 to a dollar zone.
All right, and on the bonds, Ajay Magnolia of GM Financial says domestic bonds saw a spike of fears of higher bond supply after the RBI announced OMO sale to manage liquidity. He says rising oil and commodity prices amidst the current situation may impact sentiment, though a lower September CPI print may provide some relief later in the week. Hope for the day is softening US 10-year yields. He expects the 10-year benchmark bond yield to trade in a range of 7.33 to 7.4%.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit from now in our special top 10 segment. For the time being, we run you through the list. We're looking at Maruti Suzuki, Phoenix Mills, GR Infra, Genius Power, Mazagon Dock. Their stocks will be reacting to positive news flow, where we're split down the middle. 5 stocks could be reacting to positive and 5 could be negative. Let's run you through those stocks. Concord, Dr. Reddy's, Cipla, Sun Pharma, and Natco Pharma.